Yvette, this is not a trend that we're seeing across the board. We've seen benign inflation, but I suppose it's very much issues that are specific to Malawi. So take us through the feed-through effect of that devaluation that we saw, and to what extent it's going to continue impacting inflation going forward.
Absolutely. The devaluation of the kwacha, it continues to have quite a drastic effect on domestic prices, not least housing prices, which are largely denominated in US dollars, so rental agreements that are now being upwardly adjusted, obviously those needing to convert their local currency into foreign currency, and that those prices expressed in local currency are obviously far higher, with the Malawian kwacha trading at levels close to 290 against the US dollar, from levels close to 150 just less than 6 weeks ago. So this devaluation is feeding through to various sectors of the economy, but most notably into consumable goods such as, not least just food, but as I mentioned, some other administrated prices that are conducted in US dollars. We've also seen that there have been some upward pressures on food prices. Some of the dynamics that you discussed previously with regards to corn prices do relate to this. In Malawi, we've seen quite a severe less benign weather conditions in the southern part of Malawi, which have caused maize prices to remain more elevated than they usually would around this time of year. So next to the price increases that are following from the devaluation of goods and the cost of imported goods, we're also seeing some domestic dynamics with regards to food production that are feeding through to inflation.
Yeah, it's very concerning right now, and you wonder how much more attention we should be placing on this whole climate change issue, given the fact that it's really seeming to rear its ugly head. To what extent is food a part of the CPI basket? Is it given the correct weighting when it comes to Malawi?
Well, Malawi is obviously a very low-income country in southern Africa, and obviously a large share of income from poor households will be dedicated to food. So the weight of food is very dominant in the CPI basket at close to 60% of the overall basket. I think this would be reflective of the overall profile of expenditure amongst the poorer households of the Malawian population. So obviously food inflation does have a very large bearing on the overall CPI measure, and it was already at 12.7% in May. We haven't seen the exact figures for the June release, but are undoubtedly likely to be higher than what we saw in May. As I mentioned, at this time of the year, we do normally expect that maize prices do come down in line with the harvest season, but in the south there have been very poor harvests. In general, though, however, Malawi is a food exporter. They have been able to produce sufficient food to meet their domestic needs, and that's likely to be the case this year. But it's the regional discrepancies in terms of that production that are causing upward pressure in predominantly the urban areas in the southern parts of Malawi.
We mentioned, of course, the Malawian kwacha. That's one of the key reasons why we've seen inflation tick up. We had a 34% devaluation. Kwacha now trading within that 270 to 280 range, and many saying it's now finding the new normal. Is this a positive for the economy right now, with it stabilizing at these levels? Do you see it depreciating further from here? And how's this affecting, foreign appetite for local assets?
What we've obviously seen is that the currency has stabilized somewhat on the back of foreign exchange inflows that have been able to take place as the relationships between Malawi and international donor community has improved. So we've seen some NGOs as well as bilateral donors release aid funds into projects that are outside of the government budget. We furthermore expect that these inflows will increase as the IMF releases funds to the central government in line with this ECF program, as well as some of the other multilateral organizations that do have programs with the central government starting to release those funds. So we have seen greater support for the foreign exchange market on the back of these flows. What we've also seen is that the tobacco harvests have been significantly better this year relative to last year, with prices being almost threefold of what last year on some occasions. So these foreign exchange inflows have also supported the private foreign exchange market. Nevertheless, that harvest will come to an end, and this currency remains quite overvalued in our opinion, so we could see further upward pressure on that exchange rate.
Yvette, thank you so much for joining us today. Yvette Babb, Africa Research Strategist, joining us from Standard Bank.